Let's talk about deductions that are applicable to help you reduce some of that earned revenue that you may have. Here's the law. In order to deduct a business expense, it must have three factors. It must be ordinary, necessary, and within that tax year. So that's from the IRS tax code. It has to be ordinary. That means it must be common within that industry or that line of business. Can't do anything extravagant and expect to get a deduction for it. It must be necessary and helpful and appropriate and accommodating what you do. And it must be within that tax year. These are three main components of a deduction. So as you're thinking through the things that you've spent money on throughout the year, just kind of run it through and flesh it through. If this is particularly if this is your first year of operation, flesh it through those kind of scenarios and even pull up a schedule C. If you're a sole proprietor or a single member LLC, there's you can pull up the schedule C for business owner. And let me see if I can pull that up for us. So this is the Schedule C. And you can begin to scroll down the Schedule C and look at the different types of expenses that are allowable for you. So, advertising, we'll talk a bit about vehicle expenses, but insurance, legal expenses, travel expenses, these are all allowable, ordinary, and necessary typically for most business owners. Let's just take a look at the 1065. The partnership is a more complex tax return. It's for partners, business owners that are two or more individuals, or multi member LLCs. So, more complex. This is only one page, it's at least 5 pages or more, but similar deductions. S Corporation, a bit of a complex return as well, but similar deductions. But then you begin to see some pension and profit sharing, employee benefits, and some expenses that really can be helpful and credits that really can be helpful if you want to have tax planning strategies. So then, let's talk about types of expenses in particular. So, cost of goods sold is a specific type of expense. A cost of goods sold or cost of sales or COGS, you see it named many different ways. But if you have a physical product, there will be the costs that are associated with making that physical product, all the materials, all the direct labor, any type of freight that you incur to ship it to any type of manufacturing facility or ship it to the client or make it available for sale, any storage costs, those are costs of goods sold. If you're a service provider, we have cost of sales as well. I employ bookkeepers that are directly related to offering bookkeeping services to my clients. So that's a cost of sale for me. Also, I'm a virtual practice. Most of my clients pay online with credit cards or ACH, and those merchant fees, they're at least 3%. That's a cost of sale for me. That's a direct cost of me because of the way I'm positioned to make my services available for sale. So those are costs of goods sold. And it's good to separate that so that you can know specifically how much it costs you to make your product or offer your services for sale. Then the operating expenses are those ones that we saw listed in that Schedule C and those other tax returns. I'm gonna come back to salaries and wages versus contractor, but they're the advertising, the rep expense, interest expense, insurance, and we'll talk a little bit about the business use of car and home. Specific to the salaries and wages versus contractor. So salaries and wages, again, if you're an S corp, you're an employee, so your wage. But then also, if you have employees in which you withhold tax and you give them a W-2 at the end of the year, you have a payroll company. That's a salary and wage expense. A contractor is an individual that you're paying for services, but you're not withholding tax. You're just paying them money for their services. They could be directly related to offering your service to the public, Or they could be contractors. You may have a bookkeeper that you hire as an independent contractor. You may have someone revamp your website. You may have someone doing your social media. You may have someone that's offering other services, a coach or a consultant. If you pay that individual more than $600 within a tax year for those services, you're required to issue them a Form 1099. Towards the end of the year, it's a good idea to kind of look and see how much you've paid an individual for services, and if it exceeds $600, you are obligated to give them a 1099 by January 31st of the following year. In order to do that, you need to know the total of how much you paid them, but you also need to know their name, their address, their social security number or EIN, their tax ID. And in order to collect that information, you ask them to complete the Form W-9. So you go to irs.gov, you download the Form W-9, say, hey, listen, I paid you these for these services throughout the year. I realize that I have an obligation to offer you or give you a 1099. I need that information. I need your information in order to complete it accurately. Please complete this W-9 with your information. I'm going to use this and I'm going to complete your name, your address, your tax ID with the total amount I gave you. I'm going to issue you a 1099 NEC or non-employee compensation. You give that to them by January 31st, and you also submit it to the IRS by January 31st of the following year. If you have a program such as QuickBooks, you can do it electronically. If you can just search online, and there's other softwares that you can use to create and remit and provide those 1099s to the contractors as well as file it with the IRS and the state if applicable. Or if you want to go the old fashioned way and go to Staples and get those printouts and put it in your computer or handwrite it or whatever. As long as that contractor gets the 1099 by January 31st so they can file their tax return, you have fulfilled your obligation.